So a lot of times news will bring that retracement stage of delivery, right? So we add current daily range between high and low. Okay. Now the reason this is a daily range is you have a sweep of liquidity, your sell side objective, right? This is your most recent swing low and your most recent swing high, okay, in price. So we're traced down into 50%, filling this gap here, tap into the order block as well. And then we see expansion up. Now I told you we could either get a reversal after we swept out the buy side, or we'll see continuation. So we need to see how those bullish for value gaps and order blocks hold. We got the bisi here, came down, filled it, closed bullishly, and then we closed above this up closing candle. So this down closing candle. This down closing candle here is a high probability order block. So technically, you could consider it a propulsion block since we did reach into and tap a previous order block range. But since it isn't consecutive, it's kind of hard to label it as one. But we're filling a fair value gap, and we're approaching a previous down closing range. I would consider this really a consecutive order block. But once we close above it, preferably with these kind of order blocks, you don't want to see a candle body past mean threshold. So once we close above it and confirm that as an order block, you don't want to see candle body below 50%. You could either use the candle bodies or the entire wick. In this case, since we have a larger body, I would just use the entire body. So from here to here, and you can see we tapped into it, but we still closed bullishly. And this is where I entered, targeting just that PM high from yesterday. And then once we close above, nice expansion all the way up. Now I told you, I've probably seen these in other videos. Between buy side liquidity pools and sell side liquidity pools, if you're expecting expansion, how do we tell when price is going to expand quickly or if it's going to chop around? And that would be for efficient and inefficient delivery. Okay, so if we have something like this, just watch this price reaches for further buy side targets. We'll wait for 1030 to gauge the next trade. So just kind of collect data in here. If you see a market maker model, something like this, you get consolidation at the bottom, Judas. Okay. You get something like this. You have buy side up here, buy side up here, smart reversal at the bottom, okay? And you see a gap, a large gap between these two swing highs. You're aiming for this high, but you see a large gap between these. In order for price to efficiently deliver this imbalance, you want to see both buying and selling within that range. Okay, so this is where price can sometimes sweep this out, this swing high. We may retrace into discount of the daily range, or we may just chop around here. And you're like, okay, why are we chopping around? Is it because it's not because there's not enough buying and selling pressure? That's for sure. We're efficiently filling a gap that was left over here. Okay. Now this gap could also be partially filled. So if we saw this swing high up here, sweep up, and we have clear buying and selling candles within this range, then what you would do is you would take this gap, remeasure it from this high. I mean, technically it still exists from here to here, wherever it was, but if you want to be more precise, you can drag it from here to here, and then you'll see those candle bodies work up and down within this range, officially filling it, and then we leave and reach for buy side. Now this also works for a sell model, so use that same exact logic. But if you can incorporate that into your market maker models, that's when you can find take partial zones very efficiently and then expect retracements. So that's one thing that I struggled with a lot in the beginning, trying to trade the 2022 like model and market maker models, is how do we expect when there's going to be just a low resistance liquidity run, you know, right towards the sell side, and I can put my sell limit right at the sell side or something like that, or when do I just take partial and then just leave it, right? Maybe leave a runner or just fully pull as soon as you see that low hanging fruit. And that would be obviously higher time frame bias is important. So if you see like an hourly sell side liquidity and you're looking at the 1 minute, that's obviously going to have more weight to it because there's more liquidity behind these higher time frames. But if you're trying to trade the model and there's like very efficient delivery, like in here, obviously excluding this kind of news. And here you don't see, between this low and this low, you don't really see a lot of gaps. The only gap that I see is this gap here. And the reason that I'm concerned with this one is, people will say, okay, there's enough filling back and forth, but wicks are considered inefficient. So when ICT says wicks are inefficiently delivered, this is why. So if you see a wick just come through for value gap, a lot of times we will return and fill it with a candle body. If you see multiple wicks, like if you see 4 or 5 wicks all the way come through the gap and then we leave it, on lower time frames, wicks are candle bodies. Okay, so you have to think, if there's a gap here and we have like 4 or 5 wicks, like this is still pretty efficiently delivered. Something like this though, this wick down into it and you still see this portion left here where it's unfilled with candle bodies, and this whole thing I would say is inefficiently delivered. So if we were to come back down into this range, you would see most likely candles either respect the discount end and then retrace back up, or you could see something like this, or stuck in consolidation within here, and then you see a Judas swing and then return lower. Okay, so that's how you kind of want to trade gaps and treat them in frameworks. So I think this this portion between this buy side and this sell side, sorry, the buy side and the other buy side, I was looking between the highs to see if we had any gaps. So in this price leg here, we really no gaps in here, pretty efficient delivered. Now this gap up here, we did partially fill. That's what I had marked out up to here. Now this technically is a breakaway gap, but I don't want to confuse too many people. So if you're new, just throw what I'm going to say out the window, or throw it out the window, but just don't be too concerned if this doesn't make sense to you. For the advanced guys who know ICT concepts, breakaway gaps won't hold price as much as you see other gaps. So if you see this consolidation, trade back lower, especially from a higher time frame point of interest, you'll a lot of times get breakaway gaps. If we were to trade all the way through it, you don't really see a lot of resistance from these kind of gaps. But every other gap, what I said earlier, applies. So you can see here, since the breakaway, we just trade all the way through. Took out, I think, Wednesday's high there. Yeah. Last Thursday's high too. We got substantial buy side there. We're still stuck in this choppy range though. But not good to chase price in between 10, and really 10.15 all the way to 10.30. It's just collecting data that you can use for the next kill zone within the kill zone. Do you close the trade if the candle closes below mean threshold? I wouldn't close the trade immediately. So in that case, if I was looking at this as my entry, right, I had my stop at this low, so a pretty tight stop. If we put a candle body and close below mean threshold, there's obviously some variance that you have to add, right? So the algorithm is not going to be extremely precise every single day, every single minute. So there's kind of some variance you have to work with. That's why it's not good to just, if you see this entry, you're not going to just trail your stop at mean threshold. I mean, yes, you could, but like, I think it's poor decision making if you just trail at this type, because even just one candle could wick you out. So if we did close below mean threshold, I would be watching to see if the next couple candles want to pop up back aggressively. If we don't see that, then I would close out for sure, because I would expect it probably just refill this gap, and I don't want to be in it if it's just refilling the gap and then we return lower. So if we were to close a mean threshold and the next candle pops over through, I'd be fine. If we close a mean threshold, start meandering around, and then we see another candle starts going lower, then I would close out before the stop is even taken. Nice work, missed that one. Liquidity logic still there, so also I purged first, then buy side. Right. Yep, you can see. I mean, higher time frame sell side, yeah. On ES, right? We have the SMT here between the 830 low. Buy side tagged. Yep. All the way up to the high. Now watch the fair value gap on the 1 hour, 121 to 137. Oh, I see it. This one up here. I think I'm at 130, 137. I'll mark that out over here actually too. Definitely a rough day, so if you didn't catch this, don't be too worried about it. How do you spot breakaways? Everybody says something different, lol. So breakaways, it's not really like a clear way you can spot it, right? It's kind of just practice. The way I spot it is, um, obviously news will create breakaways, so we're going to exclude news in this case. If we're trading and we see a consolidation point, okay, we see clear consolidation. Typically, if we're going to reach for, if we see no Judas swing, so if we see consolidation and then we want to reach for some sort of liquidity target or something like that, and we expand up like this, most times that first fair value gap that's formed is going to be left open as a breakaway gap. Okay, so that's one way you could use breakaways. If we're leaving a higher time frame point of interest, so if we're looking at the 1 minute and then on the hourly or something like that, we have this buy side liquidity up here. We're starting trading up it, trade up through, and then we just leave it aggressively. Most times the first breakaway or whatever, the first couple ones within the range will be left open. Now, the way that you want to, if you want to like really get into it, the way you can spot breakaways is by using market structure in the 3 PD array rule, right? So if we see something like this, where we have a higher time frame bias in the liquidity pool, and then we trade aggressively down like this, think about if price was to disrespect 3 PD arrays as we retrace, then you would expect it to reverse, right? So if we have a breaker in here, if we have a breaker, say we did something like this, where we have slight retracement, and then we close back below, and then we have a fair value gap like right around here. Okay. So in this case, we have this up closing range here, right? So this would be your order block since we closed below. And then we have a breaker and we have a fair value gap somewhere. Say we tapped into fair value gap right here. That's already 3 PD arrays. So if you were looking at the 1 minute chart, anything really above that 3 PD arrays would be left open, preferably as a breakaway gap. Okay, so if you have, even if you have like 17 different gaps up here or just one giant gap, you would like to see it left open. So that's how you can use market structure to frame breakaway gaps. That's probably, yeah, the bodyguards, exactly. So that's probably the best way you can use it. And probably the most intelligent way, I think, of framing breakaway gaps. That's most likely how ICT does it. If in his videos, if you see him like, this most likely should be left open. That's probably because if you watch the videos, he doesn't mark them out, but there's probably 3 PD arrays that are already in position that should treat that breakaway as a breakaway and kind of protect it. But I think using that and then just understanding that most times out of consolidation phases, we get breakaway gaps that form. Like here, here's a higher time frame point of interest. We're filling a gap down here, right? Kind of a consolidation in here. We have a Judas, and then we leave it. That first fair value gap is made is breakaway. Okay. Maybe I'll do a whole different video on it. We probably tomorrow, if we have a backtesting stream, we can probably find more examples. So now we would wait for consolidation to form at some point, right? So I'd be looking for. I mean, it looks like it's starting to form between 10:15 and 10:30. Sometimes you can get consolidation. Then you'd be looking for a Judas swing. But we do have an extended range here, right? Between high and low. So we'd be watching for a potential turtle soup up here, especially if we can form consolidation, reach up into the higher time frame point of interest, this gap, and then trade back lower. That'd be perfect to look for shorts, probably back into 50% of that dealing range. But we won't try and predict it too far in the future. This would be the best case scenario. So yeah, just watch this consolidation up here. We got 6 minutes till the next time interval we're interested in. So just let it do its thing. Boss, you have a video on turtle soup. I don't. I probably won't make one either, just because it's kind of it's something that's difficult to spot every single time, and I don't have enough knowledge where it's like really any model that I would use a turtle soup and strictly trade a turtle soup besides 10 a.m. 10 a.m. is the only kind of turtle soup that I would feel comfortable. 10:30 and 10 a.m. If we see a turtle soup, I'd feel comfortable with it. But in terms of like using it in your models, uh, I don't really have enough knowledge to, I think, provide like an educational video where it'd be usable. Streams are awesome, keeps me from wildly clicking. Yeah, hopefully you guys can get some discipline and patience from these two. I know it helps me for sure because I don't want to just be trading up and down. Yes, almost touching daily sibi. Yeah, we're close to it. I think it's also a weekly gap, right? Did we not fill the weekly? Oh, we filled it already. Okay. Yeah, we are close. Although the fact that we didn't get a Judah swing out of this consolidation zone is kind of interesting to me. I mean, we are in a clear buy model, so it's not like I don't think we're gonna reverse this close to the high. I think we're still gonna run out these highs, but we'll have to watch and see. And there is your what 1609 start trading back low. More patient because of the stream. Yeah, that's also why I moved away from Silver Bullet. I feel like it was too wide of a range for me to try and look for multiple trades. I would get stopped out, try and look for another one. But that's mostly because of the stream. Actually, remove this stuff. All right, so remember between 10:30 and 12, you're going to see your opening range set up. So most likely we're going to run for either the AM low or the AM high between 10:30 and 12. Now, obviously, I'm favoring another run up above here, but we have to watch and see. Okay, so we did just sweep out the high. If we start respecting bearish PD arrays, then watch for a potential CISD. If you want to take daily range high to low, 50% would be right around. I'd be looking for this gap really. NQZ 16208.5 target for the daily. Too high. Was it 208? Oh, I see. I would assume that's probably too high. If you're looking at the Wednesday, November 29th high. That is quite far. It's a good what? Still 100 points up. That'd be, since NFP, that would be almost 300 points. It's not impossible, but if it happens at the PM session, I wouldn't be watching it. So watch how we fill this gap here. It looks like we're just going to trade all the way through, though. This gap right here. How do you pop out the video screen from Discord? Did it yesterday. If you click on the stream, and then there should be an option to. Oh, actually, I don't know. I can't do it on my end. Oh, look at the bottom right in the audience, right next to disconnect quietly. There should be a little pop out button, and then you can use that. Would make the week an outside week. That's true. And we could see actually just finally leave the consolidation on the higher time frames. out of this mess. Glad I'm not missing anything. NFP was turmoil. Yeah, this is pretty rough. There's really nothing in here that is really a high probability at all. NQ4 fair value up from November 29th. Yeah, this one right up in here. We're watching it. I'm watching it on the hourly. Right up here because we're pretty efficiently delivered up until this point. So that's what this box up here is. Actually, I'll mark it red. So here is the 10:30 macro. London close. I'm not really seeing anything that I'm liking. If we can close below this up closing range, then potentially could get a short opportunity. We already filled this gap, would be high probability order block. We did get, I guess, turtle soup up here, if you want to count this. So watch this up closing range in here. And then this bisi would be within discount. Obviously, we do have gaps before that you could use as targets. Potential CISD here. SMT short, nice, good 20. Oh, I didn't even see the SMT there. That's a good point.
Order filled.
So we may actually get speed below here. So this kind of gap here may be left open. Still nothing that I'm like really liking. Media rebalance. Watch where we close now. Just filling all the way up to that 1 minute. That hourly could hit, but I don't think it has to. SMT with a yes on the higher time frame. Right. Yeah, if we fall short, return back another 20 or so. It's not like end of the world. So look for this swing low. Right, this is your first kind of. It's not super far. It's 14 points. Then obviously this gap should create, since it's left completely open, we like to see both buying and selling work within there. We could return back into premium if we want to. So if we want to drop off here and form this as a market maker sell model, you'll most likely see this create some sort of short-term resistance, maybe returning up into, if this order block was to hold whatever the short-term premium is, selling out further or something like that.
Order submitted. Order submitted.
Should get speed now, at least until 16060. Close below here, order block as well. So it looks like we're flipped. He could scalp like 13 points. It's a little late, so I don't want to enter and then just stops me out. But I mean, in theory, Could have scalped it. See it running down. Watch how we react to this gap now.
Order submitted.
We filled it. This tiny portion. Within discount though, still see it return into this bisi. Looking at it with a clear head, we for sure should fill this gap. I don't want to see it return. Or I don't want to see it just bounce off this tiny one.
Order
And here's the
filled.
reach. There you go.
Order canceled.
Quick scalp to bisi. Once again, it wasn't the craziest entry. Like, it wasn't clean enough for me to take it on the screen. But I did scalp it on the other one. So, I mean, I'll share the execution if you want to see it. I'll send it to futures trades. And we're filling this gap. Now watch how we bounce off of it. Oh, I didn't send it to predictions chat. My bad. I'll send this screenshot really quick. Huh. Look at predictions chat, and then look at the best case scenario, and then look what we got. I mean, that's pretty algorithmic if you ask me, unless I have the script for the algorithm. But yeah, couldn't find an entry. Only chase was right. Yeah, so we didn't get a return into this CISD point, which is what I wanted to see. We got this kind of displacement lower. I just entered off this return up here. But that's also just because I knew what the framework was going to be. So I felt more confident taking the scalp. I wasn't going to hold all the way into discount in case you wanted to bounce here. But it's good to, if you're new, right, and you have no idea what the heck is going on, and they just dump it to discount, don't take these trades. Okay, these are, first of all, these are all demo trades, and this is not financial advice. So don't take my trades as, or my advice as, you know, financial advice and you placing actual stuff on that. Okay, this is all in game, but it's best to just watch these play out. Annotate the charts. ICT says you should be tape reading stuff, tape reading all of his concepts once you understand them for at least a couple months, then go into demo, right? And then after 6 months of demo, then go into you know, whatever is after that. But trying to trade these concepts early on will just mess up your growth because you'll lose faith in them. You'll find your confidence is not as strong as it was maybe with supply and demand or wherever you came from before. So just watch them play out. If it does play out, you know, you screenshot. If it doesn't play out, you screenshot why it didn't. You can see in this bisi as well, we filled in the majority. We're going to see this gap, which is probably filled into. So watch this portion. Also inefficiently delivered in here. Textbook 2022. I don't know if it's too textbook because we didn't really get a clear change in state since we're just filling this gap. But with the turtle soup and the SMT, I guess you could say maybe textbook, but it's buy side all the way from over here. I think it's more textbook 1030 macro than it is a 2022. Couldn't find an entry, only chase entry was possible. If it's coming to the 50% from NFP low to high, do you think we will reverse all the way back up? I don't know. Because between 1030 and 12, we are looking for AM high and low. So if we reach into this low, I don't think that PM session will reverse all the way up to the high. But I'm not going to be taking any of your trades off this. $2 to pass my challenge. Nice. Don't force it. Don't try and get greedy. Turtle soup was an entry. MMXM-ish too. Yeah. Yeah, that turtle soup was... It wasn't as clean as I'd like to see. Like, I would want to see a little more consolidation than the turtle soup. Like, I want to see In a turtle soup condition, you want to see consolidation and relatively equal highs or lows. This up here to me was not too relatively equal. Like if we formed another high here and then we swept it out, that'd be perfect. Especially like if you're looking at the 3 drives too. But this, I guess it still qualifies as a turtle soup. Why not? It's usually clean post-NFP. It's not always clean post-NFP. Like this morning session, especially with the news, it's not the best. I would say like even if you get a good trade on Monday, and that's it for the NFP week, then you can just leave the charts altogether. Currently up 173 ticks. Nice. We're not short at 1690. That was a tap into the down leg before the failure swing. 1690? Which candle are you talking about? I think if you're talking about this candle, this is where I shorted. Oh, thank you. Yeah, this is the one. If you go to futures trades and then look at that screenshot, I entered right around there. So I saw this wick up, and then we weren't going to return to the order block here. So, and the fact that we were just filling this. So I saw the weakness in the market. We formed the order block right. We traded back lower, confirming as a CISD. And then this range in here, this tiny fair value gap, I saw we were just filling it, right? We weren't retracing off of it and trying to go up into any higher point like this gap up here or the CISD. We filled it, and then we started trading back lower again. So that's where I entered the second contract. Definitely a difficult entry though. It's not one that it's super clean textbook kind of prediction, but I mean we called it beforehand, right? Like if you look at the screenshot that I sent at 10:24. 10:30ish reversal, right? Yeah, exactly. Didn't get a Judas at 9:30, no Judas at 10. You're expecting that consolidation turtle soup reversal at 10:30. That's exactly what we got. So study those frameworks. If you didn't download the V5, I know, I'm sorry. The V100 is coming out soon. But if you didn't download that V5, it's in the 950 stage of delivery and day. So I'm hoping if this is your model or if you're trying to learn the AM session and that's where you're going to be trading, even if you don't trade the macros and you're going to trade Silver Bullet or just market maker models, please study that document. I think there's whatever model you form within the AM session using that notes and what's expected to kind of perform, and then if you want to frame a model around that, that's perfect. But this kind of setup is exactly what's written in there. It's also exactly what's written in the Q&A post. We've seen this multiple times. If you're on the stream before, you've seen this kind of play out tons of times. Random, completely random. Yeah, you can see all the selling or all the buying pressure ran out right at 10:30, and then all the sellers came in, putting us right into discount, and then we're just kind of consolidating around discount. That 1 hour wick up to here. Which ones are you talking about? What do you expect for 1050 and 1150 macro? 1050 macro, we could actually see a retracement. We do have gaps up. Let me remove some of this stuff so it's not as hard to see for your eyes. So if we're retracing it to discount, right? So you want to see a current daily range or parent daily range retracement into premium. So if we want to return into these gaps up here, it's probably a 2. It's a full 2. Yeah, full 2-minute gap. Watch these gaps in here, okay? So like right around, I don't want to measure all 3 of them, but I think I will. This red box, it's a lot of stuff, I apologize. I'm watching this for the 1050 macro. I'll put it in predictions chat so you can look at it later. But possibility, and really the only thing I'd be looking at for the 1050 macro. If we want to turn up into here, you see a fractal market maker sell model. and then we reach further into the gap, okay? 1150 macro, it's too early to tell. So if we get closer and I see something, I'll send it out. Fluxy streams really are eye-opening for me. Exact time macros really helped me seeing things more clear and stay more disciplined. I appreciate it. Yeah, I hope. I mean, that's kind of the way I'm going to try and teach is ICT teaches everything you want to know about price and some things about time. So I'm assuming that, you know, if you want to go and learn more things about price, don't learn from me. I'll obviously teach PD arrays and things of what should hold and how to look at the markets. But in terms of what I'm trying to aim for, I'm trying to teach that, you know, it's time and then price. So everything revolves around a time aspect. So if you can figure out where the portions of time are expected to, you know, produce something, then you look at price and what PD arrays are holding, and then you can frame a trade on that. Think we go into premium of the current leg here, we can get another short opportunity for AM low. Yeah, so that's exactly what this is, right? Current dealing range premium. We seek it if we see a change in state. So if we see something like this, then we see a down closing candle that's closed through, you use that as inversion, something like that. Okay, that's what I'd be looking for. That's the only way I would trade this. I mean, I'm already done. I already took 2 trades, so I'm done no matter what. But if you were to look at 1050 macro, that's what I'd be looking for. Took a trade off SMR after took 1 hour buy side breaker entry. Nice. 178 ticks too. Solid stuff. Trade opening plus new week opening gap. Oh, I didn't even see that. I took it off my chart because every single time I try and reset the chart, it does this and just ticks me off. So I took it off. But yeah, new week opening gap as well. Another PD array you can use in context with your trade setup. Time really is that missing key. Yeah. So if you've been studying ICT for, you know, 8 months or 6 months or something, you feel like there's something that you're missing, it's probably one of 2 things. One would be the stages of delivery, which were not taught as much as I think they should have been. I'm not going to criticize ICT's way of teaching. I think he actually taught it the best way he could have taught it. It was absolutely perfect because you go back and watch old videos and you'll see stuff that you never saw before. So his way of teaching was perfect. But I would say his emphasis on the time aspects in the 2022 and 2023 mentorship were not as prioritized as it was in the 2016 and 2017 core content lectures, and he didn't really emphasize these stages of delivery. So the 2 things I think that were puzzle pieces that felt like missing puzzle pieces for me would be stages of delivery, which I have a whole separate category on in Q&A if you want to read more about that, or you just watch IC's videos because he did a much better job explaining it. So stages of delivery and then time. So if you have a time-based model, within that macro or within that AM session, is there anything that you can split down where you can further kind of fractalize the time elements? So you can see 10 a.m., you know, we either have retracement reversal or you have news, you have 10:30, and you can build a framework just based off that. So you build a framework on what has been already done and what's the next kind of time window I'm looking at, and then how can I frame a trade around what's expected to happen during that time, and then I think you'll crush it from there. So we're filling this gap prior to 10:50. I would like to see preferably a return into premium, so around 16,063. If you can fill this gap right here, that would be perfect. And then we can possibly see a return lower. I'm not going to trade it though, even on this screen or the other screen. So we'll just tape read it. Feels like the missing puzzle piece. Yeah, exactly. Combine them with time. So yeah, he always says time and then price. But for me, it was just like, why do you need time if you know exactly what the price is going to do? But I mean, looking back at it, that's probably one of the dumbest things I could have said. Because it really does revolve around time. 4 standard deviations. Oh, nice. I didn't even see that. That's actually Beautiful. Where'd you pull it from? Right here? Yeah, right down to 4. Can't really see it on this one. No breaker time fib though. That would have been nice if we got a breaker. Clean breaker. Could be market maker sell model setting up down to the 1 hour bisi maybe. Yeah, I'd be looking for AM low too if we really wanted to reach down there, but it's hard to tell. You have to get some speed, and with this gap here, it's kind of rough. And we already have a large expanded range. But it does look like a market maker sell model though, right? Original consolidation, first stage, second stage, reversal, low risk, potential first stage or second stage in here. So if you wanted a clean market maker sell model, you go all the way down into 15,938. He says time is first, then price, but spends the largest portion of time on price. I think it's the key he lets you dig for. Right. Yeah, exactly. Yeah, he spent 30 years on it. That's true. There's a lot of portions that ICT leaves for you to find out for yourself, because he doesn't want the people who are just going to sit there for 3 videos, think it's BS, or try and go and think they know it all, and then go and lose a bunch, and then go and bash them on Twitter or whatever it may be. He wants the people who really want to trade and who are really passionate about, trying to make themselves better. So yeah, he does leave a lot of stuff out, or he try and covers it up with. If you think about the rants, right? I think the rants sometimes are actually good, because early on, if you're able to sit through it, I think it, one, develops patience, because you're going to need that in the market, and two, he really does show that he's passionate about his concepts. So having a mentor who's actually truly passionate about what he's going to do and learning from him, I think is one of the best things you can do, right? Instead of like trying to figure out for yourself if he's a scammer or not. I mean, just look at this. Basically predicted the market where it was going to reverse based on time schedule. I mean, I think just this day in general is enough to show that's somewhat algorithmically controlled if you're skeptical about it. Probably wrong, but it looks like to me that the market is going to take the high at 10:30. No, you could be right, because we're expecting that opening range setup between 10:30 and 12 to sweep out the AM high or low. And the fact that we're closing all the way up through here, I want to see some reaction off that 1 minute gap, turning into pretty far premium. So look for that AM high. I think you're right. We close all the way through this gap, so look for AM high now. Probably reaching into this fair value gap up here on the hourly. Hey, see my man. Hopefully we can maybe do a Q&A tomorrow. Get a large group, maybe 100 people or so. I'll send out a poll for tomorrow too. So look for oops, spelled that wrong. Watch his latest YouTube video, understand what he was doing fully because of your trade teaching. That's great. I appreciate it. Yeah, I think if you were to go back and watch his executions, it probably becomes much clearer. Like yesterday, I was just watching back all the previous live streams, and it's kind of cool because before the things even happen on the screen, and you could probably do this too if you guys have been here for a while, or if you feel comfortable with the 950 macro, go back and watch all the previous live streams. There's probably 80 or so, and just look from like start at 950, wherever 950 is in the video, and then based on what we're seeing, kind of predict what 10 a.m. is going to do. And you can just keep doing that over and over and over. And that's basically just as good as looking at backtesting screenshots. Probably better than backtesting screenshots, because you can really see what's going on. Done for the day. Thank you all. It's Friday, so if you're green on the day or week, stop. Yeah, for sure. Yeah, don't try and, just because there's 14 different macros in the day, don't try and trade every single one. Okay, if you got at least one green trade, or even if you took a red trade, I would say the rest of the day is probably going to be kind of a mess. M5 does look bullish. Yeah, for sure. We'll fill this gap down here. Looking for AM high. And you can see really no retracement entry given within this macro either. NQ disrespecting 5-minute for value gap, now above the 15. Yeah, 15-minute looks very bullish actually. Definitely can see a continuation up. I mean, 208 maybe not out of the range if we want to continue in the PM session bullishly, but I won't be trading it. What's tomorrow? Oh, here, let me send the poll out right now that we have 44 people. If we want to do a backtesting stream tomorrow, I'll send out the times. We'll do, what did we do last week? 9:30, 11:30, 1:30, 5:30 or 6:30. I assume that should work for everyone. Gotta go to work. Thank you for this. Yeah, no problem. See you on Monday. 11:30. Here, I'll send the poll out right now. Let me just do this really quick. Let me add all the little colors. All right, and then green. There. Okay, so if you go to the polls chat, and if you want to place your vote on whatever time, or if you have another time that works best for you, just put it right below it. You should have access to type in there. EST, yeah, that's all in EST, sorry. Thank you. First day here, you're really, really great, man. Thank you again. Yeah, no problem. I'm glad that you're here, and I'm glad that I'm able to provide some sort of mentorship or some sort of teaching, I guess, other than trying to do it for yourself. I think if you're in the group and you're new, either to ICT concepts or just new to trading, this will really accelerate your growth because you get to see it applied in real time. You can focus on what's important and kind of avoid the other stuff. And I think there's plenty of resources within Q&A that you can find helpful for yourself. I see it weekly chart for value gap, daily chart, market already cleared buy side and sell side, 15-minute chart order block right on the upper portion of the RTH gap. Yeah, I would assume we're bullish rest of the day. I don't really see a reason why we return back to AM low. Yeah, watch that 15-minute gap too, especially if we can close above 1030 high. That would be a bullish order block. I mean, you can actually see that as a propulsion block too. So we may actually reach for the buy side from the 29th, sorry. We'll just watch it. I mean, obviously next day I'll be trading is Monday or something like that. Walking away up is gangster. 3 trades because I can overtrade myself into a mess. Rules of psychology over everything. Right. Managing yourself is more important than really any other thing. You can use supply and demand, you can use anything, but if you can't manage yourself, there's no way you're going to be able to profit off trading. Oh, and I see you just posted a video. I'm curious to see what he grabbed. I appreciate my man. Thank you. Nice OTE in there too. Oh, actually, let's check the OTE range. Oh, we got. Oh, if you wanted to use this range, then yeah, right into it. Nice. Yep, I see it. All right, I think we will end the stream there. If you haven't already, place your vote in the polls chat for whatever time works best for you for tomorrow, and then we can go over the 950 staging day, some other stuff. Any questions you guys have, bring it for tomorrow, and we'll try and cover those. I will not be trading the rest of the day, so I probably don't expect any predictions for the PM session, anything like that. If I don't see you tomorrow, hopefully I can see you Monday. If I don't see you anytime before then. Have a great rest of your weekend. Appreciate you guys for joining. Hopefully you're able to learn something from the stream. The stream recording will be posted up on YouTube probably by 2 p.m. So I'll send a link out for that as well. So if you decide to trade the rest of the day, use proper risk management. Don't do anything stupid. Stay safe. Good luck. Good trading. And I will see you guys then. Peace.